Hello, and welcome to This Week in DeFi. This week, there's two big stories that I want to highlight because I think they really changed the landscape of crypto. So, the first one is Project Crypto, and this is not a crypto project despite the name. It is a regulatory initiative by Paul Atkins, who's like the head of the SEC. Paul is a Trump appointee, and he is like the polar opposite of Gary Gensler. So, Gary Gensler was all about Operation Choke Point, banning crypto, basically a regulatory unclarity, and Paul is opposite. So he's seeking modernization. So a lot of SEC rules were created like around the Great Depression, which is like 100 years ago, like in the 1920s. So, completely out of date, made for like wire transfers and, paper tickers and all that jazz. So, in digital age, none of that makes sense. They're modernizing it. Classification clarity. Tokens have always been trying to skirt around security laws, and Paul is saying that most tokens are actually not securities. And he's also saying that if you are a security, it's not the end of the world. We're going to have like safe harbors, exemptions. We're going to work with you, not against you. And he's also saying, there's going to be a lot of deregulation. Like, if you're a crypto project, you don't need to hide from America. Like, we're going to actually support you. We're going to help you. We're not going to, make you jump through hoops and, restrict you on everything. So it's pretty cool. It seems like from what they're saying, it seems like they actually somewhat understand crypto rather than previous administrations, previous commissions. And they're promoting, like, they say they're like supporting super apps, which is kind of a funny thing to say, but what they're saying is that if you have a project which does a bunch of things, like maybe it swaps, maybe it's also a lending protocol, maybe it has a stable coin or something, you don't need like 3 or 4 or 5 licenses. You can actually have, one application will recognize you through a single federal license rather than 50 different licenses. And they also seem to sort of understand DeFi as well. Like, they're reworking the regulations to allow for DeFi projects to exist in the US. And things like airdrops can no longer have to exclude American citizens and stuff like that. So in short, like, it just seems like they're doing a lot to make America much more friendly for crypto, and they're trying to reshore crypto to the US. And if you want more detail about this, you can check out the Project Crypto, the Presidential Working Group on Digital Assets. So they published like this long PDF called Strengthening American Leadership in Digital Financial Technology. And Paul Atkins cites it as a blueprint for Project Crypto. It also talks about AML, taxes, and stablecoins. You can look it up if you want to see all the details. Yeah, so that's the first story of Project Crypto. And the second story is really exciting if you're a trader. So we're a media today in DeFi, but we also have our own money. We have TID Capital. We're farming stables, and we're also farming ETH. So we're really excited about this. Yeah, Ethereum Treasury Companies, just like, MicroStrategy, now ETH has these. And ironically, like, the biggest one right now is actually a former Bitcoin miner called Bitmine. BMNR is the ticker. And yeah, they're transitioning from Bitcoin mining to ETH Treasury, which is a little bit weird. But they raised $250 million through a pipe, and then they've been buying ETH. They've been buying tons of ETH. Last week they bought 300 million. And I think they actually bought more, because if we look at their balance, they're supposed to have like over $2 billion of ETH, which is kind of crazy. And they're like the number one ETH Treasury company right now. Yeah, so that's Bitmine. And then the next one is SharpLink. This is a former gaming company, and this one's also pretty big. This one's headed by Consensus founder Joe Lubin, who's also a co-founder. They've raised 280 million. They've been buying a lot of ETH. According to Arkham, they did 100 million on August 3rd and another 40 million before that on July 31st. So 140 million last week, maybe more, but those are the two biggest entities. And a third one, which is kind of interesting, is called the Ether Machine. And this is headed by a guy called Andrew Keys. He's been showing this on YouTube and CNBC. They've been buying a bunch of Ethereum. I think they have they have a lot as well. So over $1 billion. a bunch of this is from Andrew, but they've also raised a lot of money, and I think they still have a lot of cash lying around with which to buy Ether. Last week they bought $57 million of ETH. They bought 15,000 ETH last week. So all these treasury companies are sucking up ETH, which is obviously good for ETH flows. And I saw an interesting comment on Bankless, which was like RSA was asking like, why is the price of ETH going down despite that? Yeah, I mean, there was some macro volatility. I think there's a lot of reasons for this. But long term, like these treasury companies are still buying ETH and they still have a premium to their net asset value. So they have the ability to do some Ponzi-nomics and dilute their own shares to buy more ETH. So despite the short-term price action, I think these treasury companies are definitely relatively bullish for ETH, and they're kind of just getting started. Eventually, they may need to be unwound at some point, but it seems like we're not quite near that point yet. So yeah, pretty cool stuff. The treasury company is actually a big deal, and there's actually a lot of nuance around that. So we're probably going to do a dedicated episode on treasury companies later, but just wanted to go over these in the overview because very significant buyers of ETH. And yeah, that's it. So yeah, see you next week.